This video was brought to you by Skillshare. By clicking the link in the description for a limited time, the first 1,000 people will get a free trial of Skillshare Premium membership. Get ready to hear many million and billion figures in this story because there is much money at play. In May 2020, Shopify became the largest Canadian public company when it surpassed the Royal Bank of Canada by raising its market cap to $120 billion. In simple words, market cap is the number of a company's shares outstanding multiplied by the current price of a single share. In other words, the valuation of a public company. Shopify stock is publicly traded in the market since 2015. This year, the share price has gone from $322 in March to north of $1,000 per share. That's a massive leap in a very short time, in a pandemic time, and it leads the company valuation at $126 billion as of September 2020. Yeah, talking about Shopify these days is talking about e-commerce, hype, and hot stocks. They just had the best second quarter of their lifetime, and they keep growing fast. So let's look at what's going on with this company and the future of e-commerce. Welcome to Company Forensics, Shopify. E-commerce, the new normal. Consumers are shifting from brick-and-mortar stores to online shopping a lot faster now. The wild success of Shopify in the last few months is a sign of this e-commerce spike. You might also have heard about this coronavirus pandemic, making online shopping pretty much a standard for many people in lockdown. Reports say that total online spending in May this year hit $82.5 billion. That's a growth of 77% compared to the previous year. Analysts are suggesting that some online purchasing trends that were formed during the pandemic may be adopted permanently. Shopify's platform simplifies small and medium businesses to open an online store and do business on the web. It has surpassed 1 million merchants on the platform and is not showing any signs of slowing down. The company's CFO, Amy Shapiro, said on their financial report for Q2 this year, the strength of Shopify's value proposition was on full display in our second quarter. We are committed to transferring the benefits of scale to our merchants, helping them sell more and sell more efficiently. So in the second quarter of 2020, Shopify almost doubled revenue from the previous period, making $714 million. That's pretty impressive, but not all of that is profit. Some analysts think Shopify is not earning enough money to have the market valuation they currently have. They still made a few $1 million in profits. Nevertheless, you may notice a big gap between that and the $126 billion in the market cap that we mentioned earlier. That's of course due to investor hype in the stock market, pretty much betting on Shopify to be the next big thing in e-commerce. But this has some investors wondering if the company could be overvalued and inflating a bubble. Is it overvalued? Answering this question requires a technical analysis that we are not going to do here. In the end, it has a lot to do with the investor's interpretation of the market. But let's check out some indicators and try to understand what's up with the hype. First, let's understand what a bubble in the market means. A bubble is an economic cycle characterized by the rapid escalation of market value, followed by a quick decrease in value, a contraction that leads to the crash or bubble burst, according to Investopedia. So back in Shopify, here's how they make money. Their business model is based on two main revenue streams. First, they have a subscription for merchants with plans ranging from $29 to $299 a month. This revenue channel is growing at 28% year-on-year as of the second quarter of 2020. Second, Merchant Solutions is a global payment processor that facilitates service like automated recurring billing, mobile payments. They get a commission from these solutions, and it has been outgrowing the revenue from the subscriptions. And of course, they keep expanding their services and features. They're now getting more into fulfillment and shipping, offering solutions for merchants all across the sales process. In late 2019, they acquired 6 River Systems for around $450 million. That's a startup focused on warehouse automation using robots and cloud-based software, a massive enhancement for their fulfillment network. The Shopify App Store is a digital marketplace where developers create apps for merchants to enhance their experience and customize their store. They even loan money to businesses now with Shopify Capital. With all of this, they're close to breaching $1 billion in revenue, and they're not there yet. Still, taking a quick look at the balance sheet from their financial report in Q2 this year, you can see the valuation of its current assets at $4.3 billion. In contrast, liabilities, $320 million. Without any more technicalities, this at least means that Shopify has cash for days. They can respond to their financial obligations and still be in a good position with a few $1 billion to spare. This, of course, doesn't answer the question of whether the company is overvalued or not, but maybe it is an indicator that the company is not going to go bankrupt anytime soon. Analysts suggest that this high liquidity can be valued a lot in this current market, given the economic instability caused by the pandemic. Beyond SMBs. Shopify started as a solution to help small and medium businesses sell online. The company's CEO, Tobias Lüdtke, has talked about how the company began in 2006 as he and some friends had the hobby of snowboarding in Canada and wanted to sell snowboards. The company was born as the solution to the overcomplicated process they found to sell these snowboards online. Lüdtke said that it was evident that no one was thinking about new businesses going online all the time, so they created Shopify. It went from a small startup to being publicly traded in less than 10 years, yet the last few months have been critical and can be setting the pace for the future. Today, it still hosts small and medium businesses as they are at the core of their mission. Yet, they also power stores for companies like Tesla, Nestle, and Budweiser. The total value of orders managed on Shopify for Q2 this year was $30.1 billion, which is a growth of 119% from the previous year, and it already surpasses eBay's. Having caught up with eBay in metrics like this makes Shopify the next real contender for Amazon, isn't it? Well, yes and no. Hunting for Amazon. Shopify and Amazon are e-commerce businesses as they incur in online sales, but comparing them may not be accurate. Also, the gap between them is still pretty large. For reference, the total value of orders managed on Amazon was around $335 billion in 2019. But there are many other players interested in their share of this e-commerce bonanza ruled by Amazon. Walmart, another retail giant, has been expanding its online operations and is joining forces with Shopify now. In June, they announced a partnership that will bring around 1,200 Shopify sellers to the Walmart marketplace. It may not sound like a lot, but this can be the beginning of this relationship. The vice president of Walmart's marketplace, Jeff Clements, stated at the time, Shopify powers a dynamic portfolio of third-party sellers who are interested in growing their business. This integration will allow approved Shopify sellers to seamlessly list their items on Walmart.com, which gives Walmart customers access to a broader assortment. For some context, according to TechCrunch back in 2018, 140 million customers shopped in Walmart stores weekly, and 90% of Americans lived within 10 miles of one of their locations. This geographical presence gives obvious advantages for fulfillment. 2-day shipping and seamless returns are already a part of Walmart's offer for millions of products. These moves look like direct attacks on Amazon, and only time will tell if they will scale and rival the Seattle behemoth. Yet another company looking for its share of the pie is BigCommerce. A few days ago in early August, this company entered the stock market with an initial price of $25 per share. The road to catching up may be long for them, but they're already in the fight, and investors' interests in e-commerce is not slowing down. Now, you may have noticed some new lighting and vastly better audio on our last couple of videos, and we spent some money on improving our studio, especially on audio and lights, but we'll still shoot with a mirrorless photo camera. It's not a dedicated video camera. And a DSLR or mirrorless camera are both great alternatives for content like this. You can squeeze significant video quality out of one, and there's a fantastic course on Skillshare to help you do it. Fundamentals of DSLR photography runs about an hour and a half. It goes over basics from shutter speed and aperture to useful tips and tricks, and even a studio demonstration to visually show you how these fundamentals work. You can watch this course and thousands more on design, photography, decoration, post-production for free by using the 2-month free code that the guys at Skillshare gave us for this video. Last time, the 1,000 codes that they gave us ran out in about a day, so make sure that you grab yours from the description. So do you think Shopify is suited to give Amazon a run for its money in the future, or are they just in a different league? Let us know in the comments, and we'll see you next time.